What's up, fellas? Can you hear me? Anybody else got a microphone?
Hey Mark, can you
Hey
hear
there.
me?
Yeah, I can hear you.
Hey, how are you?
I'm doing pretty good, trying to figure this stuff out.
Mm.
So you all set up and ready to go?
I'm just waiting for the RDR range to form, like 10:30.
Oh, right, yeah.
I still haven't figured out the silver bullet. I'm still doing DR idea.
Oh, well, that's, whatever's working for you. Um, we covered the silver bullet quite a bit in here. It's kind of what I'm going to be trading today, but I'm going to drop down to micros and I'm going to take some probably more trades than usual. I'm not just going to limit myself to a certain time zone or certain
Are you
area.
waiting for the MSS to happen there?
Am I waiting for what?
For the breakup structure over there?
I'm kind of waiting for 8:30, and then see
Oh,
what happens.
I see.
This time right in front, sometimes it's just a fake, so I don't want to get tricked here.
I see.
Give it a few minutes and see what it does, I guess. But yeah,
How's your Apex accounts?
what's that?
How's your Apex accounts right now?
Yeah, I'm trading the Apex accounts. That's what
Yes.
you're on too, right?
Yeah. I
You're,
mean, did you recover from that drawdown or are you still
I
in
haven't traded.
drawdown?
I haven't traded since. So yeah, that's why I'm going to back up and do micros, and I'm just going to kind of test something here.
Yeah, like, how much you got like left in drawdown? Like how many? Like how much? Like $1,000?
Not quite.
Uh,
So it was a big drop. I could kick
uh,
kick myself. Yeah, it was just stupid. I don't know what happened. Uh, I I thought that price had to go back up and take some equal highs, so I passed when I saw my setup because I thought, well, there's no way it's not going to go back up, and my setup worked fine. And then I got frustrated and started taking
oh,
stuff. Then I started taking stuff.
revenge trading.
Yeah, exactly. You know, and just couldn't. I got back ahead, and then went back in again, and then just blew it. So yeah, I got to work on my psychology too. The strategy part's the easy part. Just knowing when to push the buttons to buy and sell. That's not as hard for me as trying to control my emotions and exit when I need to exit. And, sometimes I do it pretty well. If I just have a bad day, I can kind of go to bed and put it behind me. But for some reason on that day, I don't know what happened. So
I see.
took some notes, learned some lessons. That's how we get better.
Yeah.
All right, here we go.
That's a market structure shift, right? Looking at the left side.
Yeah, it is. Just like I said, right here, this first time is also usually a Judas swing. It's
Okay.
a fake move, and if I get in short right here and it turns around and rips on me, I'd be disappointed. So the actual silver bullet window it starts at 9 or 10 o'clock New York time, and I'm not opposed to waiting for that, but I just don't trust this big fake right here. It was bullish, bullish, bullish. I mean, it's been going up, up, up,
Okay.
uh, and it could turn around and just rip straight back to the top. It's sitting on top of this fair value gap right now too, so we'll see. I just want to practice patience. When I'm
Are you
trading,
still following
go ahead.
a trading plan? Like you had a target of um like
Yeah, I
five
did,
hundred
but
dollars per day?
now I've backed down because I'm trading the micros. So
I
um,
see.
now I'm more focused on just trying to sort of. I'm going to back test this strategy live, these silver bullets, um, and use what drawdown I have left to see how well that strategy works. Basically, I couldn't make myself drop down and trade micros and do partials and runners and all of that. I don't know why. I guess I just felt like it was less profitable than trading minis. But the minis, I mean, you can get in trouble too quick with the minis. So
Oh,
I want to find out which way works better. I might be able to use less position, but capitalize more on taking partials and setting runners. That might make up the difference, and use less risk at the same time. If I can make the same amount and use less risk, that seems like the way to go. But I couldn't force myself to do it before, but now I'm sort of backed into a corner, and I'm like, well, why not? Why not test this? This might be the way to go.
yeah. Has
And
anyone tested the silver bullet like for a lot of days, like testing the strategy for like say 1 2 years?
no,
Like
I haven't done it that extensively. Somebody else did quite a bit of
said
it. They did like a year's worth, and I sort of piggybacked on what they did. So I knew
on
it.
Twitter.
Huh? Yeah.
On
Uh,
Twitter. Oh, okay. And
back.
what was the result?
It was extremely good. I can find it for you. I got it pinned. Um, let me look here. think she has it pinned too. Yeah. It's not pinned anymore. Let me look at my bookmarks. I got it bookmarked. Wow, where'd my bookmarks go? Oh, they're there. Whew. Can you see that?
Oh, yeah.
So,
Oh, that's a lot.
yeah, her data is really, really complete. Um, I think she said her best time frame was right here, 940 to 948 was highest probability. 932 to 1004 was the highest, and let's see where the percentages were. Yeah, so it was basically a 1-to-1 with a 95% win rate.
95%. Oh my God.
Yeah, 1-to-1, and she did the full year of it, I think, quite a bit. 1 hour trades, and she used some different criteria for entries as far as PD arrays and things like that. So that's kind of what got me excited about it. I was like, dang, and I had similar results, very high success rate.
Yeah,
Um,
seniors.
so So technically, I could have got in right here, put my stop loss down here. I didn't take it, but we'll see. Like I said, there's so much volatility right here in this first few minutes. There's the big push, market structure shift, fair value gap. You know what?
Order filled.
I went long.
Really?
Yeah, whatever.
Order working.
So I don't know. We'll see. We're at 10.
Order working.
So I got a partial in right there. If it hits it, my next partial would be liquidity.
Order working.
Okay.
You in long in your Apex?
Yes, right there.
Oh my God.
So I went long there. I'm at 4 points already. I mean,
Oh,
I'm trying to take off half of it right there. I mean, it was very, very low risk, a point with micros. So I'm trying to use two to simulate what I would do with contracts, right? So I'm seeing how I do with micros. If it works with micros, then I go to contracts. So we'll see. Like I said, I'm not worried about it if it fails. Give that two ticks and see what it does. A lot of times it'll dip down here again anyway. I don't see how much liquidity it took. It could come down quite a bit more. So I don't know. But I should have probably took my took my change up here, but I'm really trying to be mechanical about it and, you know, just stick with set it and forget it type stuff. So when I go monkeying around with the trade, you know, more bad things happen than good. This is just really crappy price action too. I mean, I just took it on a whim because I saw that big push and the fair value gap right here. And the MES chart is a little bit different than the ES chart. So I don't know. But I could definitely see it. You know, there's a lot of liquidity up here. It was a good trade. I believe I said I would go break even at 3 points. There's 3 points, so it's a break even trade now. So here's the rules I'm following. That's the mechanical portion of it right here. So 2 contracts, 5-point target, 3 to 5 point stop, break even at 3, half off at 5 points, break even if I haven't already gotten break even, and then target the next liquidity. So that's basically what I did here. Here's the 5 points would be the first partial, and then targeting next liquidity would be up here. The only thing is with this drawdown, you know, if it comes all the way up here and comes back to break even, it feels like a loss. So, you know, even though I didn't lose any money, I lost my, you know, portion of my drawdown. I can't see what it's. I guess there's an inverse fair value gap right here. And
Order filled.
Alright, so first target hit. I don't know if that's safe or not, but go below this fair value gap right here. See if I can get this other fair value gap right here to stay open. That would be nice. No. Yeah, I'm not going to take a loss on it. Let's get as much of that as I can. It would be 5 on one contract and a little over 3 on the other. So not quite a full 5 points, but yeah, we'll give it the fair value gap. Let's just see. It's way ahead of break even. even if I get tapped out in here somewhere. And if it does manage to go all the way, then that's like that'd be a 8.5 point total range with half of it coming off at 5. So this price action sucks. This is just bullshit, really. Excuse my French, but tired of seeing all these wicks on ES, you know. So you see what I did though, right? I just took the normal, criteria for the silver bullet type trade when there was a liquidity grab here, big displacement, broke structure here, created the fair value gap here. And normally I would have took that here, and my stop, I still wouldn't.
Order filled.
Okay, so that worked perfectly, but I wouldn't have got stopped out, but I didn't get near as much. I wouldn't have got as much profit because I waited until that came all the way back down here to get long instead of taking it with a limit order right here. So at 18, if I'd have took it where I normally would, I'd just now be taking my partial at 18. But there's really no liquidity to target, on the upside. So that's cool. That worked out nice. So now we gotta kind of journal that is, let's see, I took it at 46.10.50. I didn't get my spread. Oh well, 4.5 points there. And another 4 points there. So $80. I think that's for one contract or for one account. I'm on. Oh wait a minute. No, that was $800. I forgot. Yeah, it's 20 accounts still, but $40 a pop. So yeah. I just want to take these as many as they show up. I want to just take them and see what happens, and then I'm gonna chart them right here. I may have to go back though because I don't want to stop right now and fill this all out. Kurt, how's it going? Can you hear me? Kurt. How do I pronounce your name? Is that Hasnain? Hasnain? I message you all the time, but I don't talk to you much. I don't know who all has microphones either, so. Anyway, just took a silver bullet type trade, 2 contracts, took a partial at 5, let a runner go up to the next liquidity level, This is the basic premise of what we're going to try to just teach here over and over and over. It's a real simple model, high probability, only a few criteria to hit, that need to be met, and it hits. Oh wow, okay, so it was actually 2250 there and 40 there. So it was a $62 trade times 20, $1,200. So this was $1,200 because of the 20 accounts. It worked out well, but it didn't give me much of my drawdown back. But if I do enough of them, I'll catch back up. I just want to stick with what's considered an A+ setup. This has got such a high rate of success that if I just do this, I think we back tested this. Yeah, we did back test this. Let me see if I can find it. Back test. Yep. So we back tested it on Friday. There were 21 trades. 13 of them were winners. 2 of them were losses. 6 were break evens. And we ended up plus 67.5 points just by taking that same type of trade every time we saw it. Not necessarily paying attention to the time frames or premium or discount. Just every time we saw that breaking structure, displacement, fair value gap, we targeted 5 points and did really, really good. So coming back down, if it comes back down, I would need some sort of a structure break. It needs to create a swing low, and then once it breaks that swing low with a candle that's showing energy and leaves that gap, that creates our criteria for an entry. If you don't know what a fair value gap is yet, that's what the ICT stuff is for, to teach you about the PD arrays. So see where we're at on the higher time frames. Just so yeah, coming into a fair value gap, higher time frame PD arrays here. Also a 15-minute. We're already in the 30-minute. I forgot to make that anchor text. There we go. So could go either way, but for right now it seems like we're getting some resistance there. But on the higher time frames, it's actually pushing through those PD arrays. We've already took, it looks like we've already taken that one, so yeah, that's not really a target anymore. The next draw on liquidity for that time frame would be up here. And it could very well be reaching for that. I don't know if it's going to hit it today, but if it keeps going up, eventually it'll get close enough to that we probably take a shot. Alright, so if we get a fair value gap right here, that would probably be another entry. But it's also coming down into another fair value gap, so that's kind of iffy. It didn't candle close, but where are we at there? 14.75. Yeah, I'm gonna wait. I gotta wait till this candle. I gotta wait for this candle to close and another candle to come up in here, so we'll see what it does. But this candle did not body close above the low, so for me that's not a break of structure. And this one is so sketchy that I'm not sure I would take it, especially if it doesn't body close. Then I'm not gonna. If it would have closed down here, I'd have been more confident. But 5 seconds left. That's not bad, really. I mean, oh crap, I'm in the wrong. 14.75.
Order working.
So I've got a limit order in at 14.75 if it does decide it wants to come back up to here somewhere. But not, if it drops all the way down here and takes liquidity, then this one got away from me most likely. It was a runaway gap or breakaway gap or whatever. So I wouldn't feel as good about it. Wow. Yeah, definitely not going to take that one, so we'll close that. Close that limit order. Wow, my trade debate's acting stupid. Okay, I got no positions, no orders. Alright, so this definitely counts as a serious market structure shift. And it could be coming down here. Yeah. Created a 5-minute fair value gap up here. On the, I'd have to look at like the hour time frame just to see if how bullish we are overall. So even with that little drop right there, we're still, you know, still bullish on the hour time frame. To be a real market structure shift on this time frame, you'd have to come way down here. So this could very easily just turn around and pop back up. So keeping that in mind, because it was such a move, that could have been a liquidity grab. Doesn't necessarily mean it's a full change of direction. So I'm just kind of sitting on my hands right now for that. I wouldn't have got in anyway unless it comes all the way back up here. And really, if I was smart about it, I would almost need, yeah, I would need it to come up here somewhere. That wouldn't even be 50% of the range. So if I was following the discount premium rule, I couldn't take that short. But definitely up here, if it got to this one, and especially this one would be really an OTE entry right here. Just kind of waiting to see what it does here. Again, if we fib the range that we've got here, we would need a retracement beyond this, and if I'm risking 5 points, I would need my entry to be right there. That's just taking all factors into consideration, where we're at on the range, how much risk I want to use, taking advantage of the nearest PD array. So, the odds of it going that high are, less, but I'd rather miss the trade than take a bad trade, I guess. I just got one winner, so I'm already up. No reason to do anything silly. It didn't even really drop. It didn't even take London, much less Asia lows. So those are still targets for the session, for the New York session, that I expect to be maybe taken, but who knows. It started off with this contraction here in London, and then it kind of followed through with the same type of motion in New York, which we were talking about that earlier. Now we're just in consolidation. Can anybody hear me? I'm not hearing anything, so I want to make sure you guys can at least hear me. Herman, how's name? Kurt, Bobby, anybody? Ed? Somebody say something.
Yeah, I can hear you. All good, buddy.
Okay, perfect, thank you. Anybody have any questions about this? What we're looking at, what we're looking for? Just kind of following along. The fib is I know lots of people use it, but the way ICT uses it is he'll set this, he'll go from the current price leg. You could fib it from anywhere if you wanted to. You could fib this price leg. You could go all the way back and fib this price leg, but you kind of just deal with the range that you're in, because each price leg has its own discount premium area, which is the 50% line. So in order to take a short, we need to be up here somewhere. I could take a long down here if I got the criteria that I needed. And as of right now, if I'm going to go short, I need it to retrace up to here, because that was a pretty bearish move right there. I wouldn't be surprised if it's going to head down. Usually when you see something like that, it doesn't just pop all the way back up, but not this far into the session. I'd expect that maybe in the first, few minutes of the open, that big move, and then a push all the way back up. But we're I'm going on 40 minutes in, so I don't know. I would expect a little inducement right here. Take out these highs. If it is going to turn around, I'd expect it to take this out first. So it's not really bullish if it goes up right here. That could just be manipulation to get people to go long. So we'll see. Still no fair value gap, still no entry criteria met. Well, you got a 1 tick fair value gap right there. But we're coming up into another fair value gap here. So if this wasn't here, I might take this one if it came back to it. But because we're in between two PD arrays, it could consolidate some more, and it's sort of a 50-50 proposition whether or not it keeps going up or comes back down. Because the liquidity was already taken at the top, and that's a long way to go just to take out whatever's right here. It makes more sense to consolidate right here, build some liquidity, and then come back down for this more extensive liquidity cools down here. So definitely more money for the banks down here than up here, unless it's going to go up for the day, and this is the bottom for the week or something. But I can't call it right now. We're just kind of going to go with what we're looking at the moment. So another fair value gap, and it just got closed. So that's bearish. Close that fair value gap. Order block right here, but not a very strong one, because it's just supporting this fair value gap right here, which, like I said, it's only a tick. It's not very much. And our market structure shift candle that created the fair value gap didn't actually get a body close above this or this, so that doesn't really count as a breaking structure here. This would, but it didn't leave a fair value gap, so it's not as strong of a signal. Now, if we get a nice rejection somewhere in here, maybe taps up here into the 50% and then turns around, I could still go short. I'd be more comfortable doing that. How's it going, Willie? You being a bully today? Okay, so we're tapping that 50% now. We did tap into it. That's the first place I would start looking for it to turn around, because it's in a fair value gap and it's now above 50%. Basically all the people that were going short here have been shaken out of their positions, most likely, unless they were holding, 5 points or more stop loss. So usually that's what this is before it turns around and comes back. But let's see what happens here. And another fib that we would take would be the consequent encroachment of that big fair value gap. So we would just get to 50% of that and try to see if there's a body close above it, and that tells us if we can expect it to maybe keep pushing through. No body close above this line just increases the probability that it's not an actual push up. This is just, the swing, more inducement, more manipulation. If you follow smart money, a lot of it is just about the algorithm really trying to get people to go into the market against the direction that it's actually going to go. So whenever you see some of this, you can expect oftentimes a reversal, because a lot of people went short here, they got stopped out. A lot of people went long right here. If it turns around, they get stopped out. And it's just this repeating process of liquidity sweeps, draws on liquidity, and filling these imbalances. And if that's what you're looking for, you can kind of anticipate, with high probability where the price is going to go. We're on the 5-minute fair value gap. We've actually closed above the consequent encroachment, so that's bullish. But it's a guide, it's a guide, not a rule. So it's just, as you're watching price, you're sort of mentally ticking off a lot of different little check boxes as different things happen, and kind of navigating that on the fly and constantly reevaluating your position, your bias, where you think it's going to go. Since it broke the consequent encroachment here, and we've got these huge rejections here, that could be very bullish. We're also in a bullish higher time frame, so there's no reason to say it's not going to go up. But on the flip side, you've got quite a liquidity pool on the downside, which is a magnet. So there's not a lot to do. So this qualified as a break-in structure with a fair value gap. It's not huge displacement. I would have rather seen something like this, or even this big push. This is kind of an average sized candle for this area, but there's several of them in a row too, so take that into consideration. We'll know here pretty quick, and you can just keep repeating this process. You can fib the next one. Look for a body close coming south. It didn't, so that's bullish. Go back and look at the higher time frames. So got a small 60-minute fair value gap right there. We're in this 4-hour fair value gap right here, and it doesn't look like we've closed above the consequent encroachment. No, see how it's respecting the middle of this fair value gap? Pretty much just means it could go either way. I mean, it hasn't shown much of a desire to go up by not breaking this and closing above it. So you've got multiple candles here that have not been able to close over the consequent encroachment for this 4-hour fair value gap. So until it does, we're bearish. I mean, we're still expecting it to kind of do what it's been doing. And a rejection from here can be, there's 46.10. So there's a 15 point range from here to here. So we could get a good, our normal target, 5 points if we get a reversal up here. So on the higher time frames, it looks good for a reversal. We jump back into the lower time frame and we look for our entry model in here, which would be the break of structure fair value gap. And it's just setting up right now. It's setting up for the move. By consolidating, it's building orders. You can pretty much just draw out a little box range right here and say that, there's orders above and below. And it'll normally, when it consolidates long enough, it'll kind of pop out one side sometimes and then go the other way. Or it'll come down here, pop out, and then reverse and go on the way it's wanting to go. Just a common repeating thing. It's very efficient at capturing this liquidity, and it's creating liquidity on the bottom down here, so you would expect it to also capture that before the move up. So it just took some liquidity here. So that's good for a down move. I would expect that before it comes down. And if it's going to go up by the same token, I would expect it to come down here and pull some of this out. But it doesn't have to. Like I said, it's one of those little check boxes in your mind that you're looking for, and it doesn't surprise you, when it happens. And the farther it goes to the side, then you just make your adjustments, and you're always keeping a low and a high for the range. And as long as it stays inside that range, you're still in consolidation. But the market knows that too, and it knows there's people that are breakout traders that are sitting here waiting to catch one of these breakouts. And that's why you have to anticipate often a trap for them. Pop out, maybe get a retest, and then drop back down, because people get into the market when they see that. And that's the whole basis for trading smart money concepts, is we're trying to trade on the side of the banks, not the retail traders who are getting trapped and crushed by the banks. If you've ever been on that side, as a breakout trader, how many times you took a breakout and it immediately went against you and you just felt like the market had your number. I know that's how it was with me. So now we're over consequent encroachment on this one. Let's go back and check the 4-hour. It doesn't look like we've made it over that one yet. The higher time frames are always the ones you want to give the most weight to. So if we get a close here, well, it's got 3 hours left on that candle, so we wouldn't really be able to tell by sitting here watching it. But And it has came all the way up here, all the way to the top of the fair value gap and dived back down, which is really a bearish signal. So kind of go back down to one of the other ones and see. Not really in anything else. This one right here, the 30-minute. So we're looking for a body close over the 50% right here before we would consider it a bearish push. It did close over on the 1 minute and the 5 minute, but those don't hold as much weight. So the next one we have that's close that we can use for an approximation is the 30-minute, which would be a stronger signal. So if this wasn't here on the 30-minute, then we'd be kind of looking at the 5-minute to say, you know, bullish, closed above the halfway mark. And definitely the 1 minute also. So 46.12 is the 50% on that. So what I'm going to do is I'm just going to close that. Go over here. Put array on 46.12. And I'll know where the halfway point is on that fair value gap. Obviously, since we're on a much lower time frame, on that other time frame, this is a wick. Wick popped up and came back down. So there was no body close. So this is the SMT, looking for divergences between the indexes. So NQ came down here and took a lot of liquidity. Actually it took, yeah, so NQ came down and took more liquidity than ES did. ES didn't even take London, whereas NQ did take London. YM kind of in the middle, but nothing really there to use. They both came down and took liquidity, so sometimes you can get a good indication if one of them really takes a deep drop and the other one sits way up here somewhere. That's real bullish to get a buy here, because most likely this one isn't going to pop all the way back down. I can't believe I made one Reddit post tonight and like 30 people have showed up. That's crazy. All I did was just show a post of the monitors and stuff. I said, let's see your trading rigs. And it got a lot of attention. Alright, so this is ugly. I mean, this would be the screen I would execute on, and you can see there's just nothing there. We're in that fair value gap right here, though, on this time frame. So it's definitely respecting that. But it did close above the middle. Another fair value gap up here. Small fair value gap right here. I like the other one to actually look at the stuff, trading view, but you just can't use a trade copier on trading view. I have to use Tradebait. Maybe someday they'll integrate that or find a way. So on the DR IDR side, we are almost to our hour where our range is created. About 15 more minutes. This really looks like it's going to turn around on the 1 minute. It's also stalling here on the open price, so this DR IDR box right here has the open is right here, so we're finding resistance. We're not getting a body close over that. Rejecting out of this lower time frame fair value gap. So lots of reasons to maybe anticipate a reversal here. But that's why we wait for the criteria. We're forming opinions right now so that when we see our criteria, we have confidence, that we've got some added confluence to take the trade. We might use that knowledge to go into a heavier position. There's different ways to kind of be using what we're learning right now to apply it to the trade when we actually take it. If I was looking at the failure to close above the opening price, being in a bearish fair value gap on different time frames, multiple rejections out of here, the strong draw on liquidity down here, that's equal lows. And when you think about it, we made quite a push over here. Granted, it came after a drop, but all this liquidity has been untapped. So, the market makes these sweeps back and forth, and right now there's plenty to target on the downside. This is a pretty strong order block, I think, right here, just because of the fair value gaps that it generated. So for it to get back up here, we have to break this fair value gap, break the open price, break the order block. We'll get a lot more information once we get a confirmation on the DR as well. Once it breaks one side of this box, then we've got a bias for the session, and it's a lot easier to target. Normally by now on a bullish or bearish day, it's closer to one of these sides when that box closes. We got 5 more minutes for the hour to be up. So I like to see it up here somewhere and then just push straight up and take off. But we're dead in the middle, which is a lot of consolidation. But we had a lot of movement in Asia. We had a lot of movement in London. So that kind of sets us up for a rangy New York. And it's just the opposite when we get consolidation in London, consolidation in Asia. Then you get a lot of movement, from New York. So again, that's just, a pattern that you can look for. It's not guaranteed. Nothing is 100%. Because I always say, if you find something, we'll never find something that's 100%, because then we would exploit it and we'd make all the money. So they're not going to let that happen. I imagine they shoot for 50%. If they can make something happen half the time, they make money on both sides. So, they're winning either way. But we're guessing on 50% of the time. So we're going to be wrong half the time. They're going to be right 100% of the time. So put our box back. So the longer and longer it goes to the side, increases the probability that we get a sweep from this range right here. Just because of all this, the purpose of this is time dilation, time distortion. We're taking up time and we're building up liquidity at the same time. So if that's the purpose, then the goal has to be to eventually sweep this liquidity. And if the market was going to take off in one direction, say it's going to go long for the day, it's definitely going to come back down here first. It's not going to let all these people go long, because they all went long here, 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 here. Everybody's long. Same thing up here. All these people are short. They're expecting it to bounce and pull down. So it's really a good sign, the longer it goes this way. It's building up for an explosive move, and we can expect a fake first. So you don't ever take the first move. And you'll be wrong sometimes. Sometimes that'll be the move and it'll go off and leave you. But if you get in the habit of sort of looking at it from this perspective, you won't get caught in the trap, because the trap happens more than not when you get this sideways consolidation. More often than not, it's going to come down here and fake a breakout and then reverse and then go take the other side of the liquidity and then go the way that it originally intended to go. And that's the whole AMD idea. The accumulation, this is the accumulation, then you get a manipulation one way or the other, and then after the manipulation, which is the inducement to get people to go in against the market, then you get the distribution, which takes the market the other way. And if you look for that enough, it happens over and over and over. That wasn't a real strong move, but there's people chomping at the bit to go long right here. So there we go, that's better. Now we're closing this fair value gap. Still got 40 seconds though. So I'm still really bearish right here until this closes this fair value gap. I think this would be a good place to form an idea. If it can close that fair value gap and make another candle, then we probably continue up. If we come back down, then that was the fake. And if it's the fake, then it'll take the other side out. And like I said earlier, this is really crappy price action. I shouldn't even be probably trading much of this. This is just a terrible looking DR box, DR range. I'm hesitant to take anything, but we'll talk about it anyway. Alright, so we'll see what it does. And I'm not gonna say that was it yet, but we'll see, because it can go both ways. Tricky market. But this is what I was expecting, and this is what I was expecting. So if it was going to go short, I was going to see this first. Right here, people got in because it broke. Everybody's watching the box. They draw that box, draw their flag, thing, and when it gets broke, that's their, some people will wait for the retest. Some people won't. As soon as it breaks, takes off, they want to get in. They're FOMOing for that trade. So, and anybody that went long here, they started probably regretting their decision down here somewhere. We're actually on NQ too, so similar but different. So on this one now, see if we closed on the 30-minute. Yeah, so we're above the consequent encroachment now. And now we've got the same thing through this side. So we took the liquidity here, we took the liquidity here. Now the market's going to pick a decision here pretty soon, most likely. And like I said, based on everything we saw here, it kind of felt bearish. We closed another fair value gap. So yeah, we're bearish now. We got another one here, close that one. All right. So now we would be expecting, if it's going to continue down, to at least come down to here, but it could stop in this order block and bounce as well. So if I was going to take a short, I might target the liquidity, but I'd want to see how it reacts once it hit this order block, because that's a good place for it to reverse again. Let's see if we can close this one. We didn't create any fair value gaps on the way down, so even though it looks like a big push, since there's no fair value gaps in there, it's not as strong as it looks. I wouldn't trust this, and I don't even have a trade in here, even though it broke structure. It broke structure right here, but no fair value gaps created. It looks like a very small one. That doesn't count. That's so small. So if we close this one out, then most likely we're coming all the way down. Yep. Close another fair value gap. So that makes sense. I mean, we had this big push. We had the retracement, get people to go long, catch the people that went short here. A little hesitation here, build more liquidity. Take the buy side liquidity here, turn around, come back, catch the breakout traders, take their money, and then everybody that went long here, they're probably out down here. So it's a really efficient process of liquidity sweeps using this same, rally, drop, consolidate, rally, drop, fake. And that's really the basis for smart money trading. I mean, that's the way we look at the market. We don't pay attention to lagging indicators. We look at the PD arrays that are created, and we understand how price is going to react to them, what it should do when it gets to it, if it's going to keep going a certain direction, things like that. So this is even nasty looking for NQ too. I mean, NQ is usually cleaner than ES. So ES is kind of bullish and NQ is kind of bearish, which isn't a good sign for us really. It means we're just dealing with really erratic price action, and some of the rules aren't going to hold up as strong and fast as we might be used to. Ideally, you want to see both of them, doing the same thing, confirming the DR at the same time, close on standard deviations, things like that. But we're just not getting that, so. Definitely no trades on here yet. Nothing really to see. It did tap into this one. might have been a opportunity. I think at one point I had an optimal trade entry up here somewhere on this fair value gap, but I got distracted by looking at NQ and wasn't watching my screen here. Originally this was an entry I was going to take. I think I had it marked. I had a little, I guess I deleted it. I had a little ball somewhere on one of these fair value gaps, and I had like a 5-point stop. See, I think it was right here, 15 to 20. So yeah, this would have been an entry that I should have took if I'd have been paying attention. I was over there on NQ and missed it, but that would have been from 15. That would have been my other 5 points right there. Well, if I took it right here, yeah, 15. Damn it. 6 points. And the way I had come up with that location, even though I didn't take it, we can talk about it real quick, is I fibbed the range. And optimum trade entry is in this area right here. I used the fair value gap as confluence, and I was going to take the trade right in here somewhere and look for a short, because it had already retraced up into this area. I was already bearish, thinking it was eventually going to come back down. So my idea was to take the trade right here. I'm not sure what changed my mind, but I raced the circle, so I guess I changed my mind for some reason, but I don't know. Current interval only. All right. I might get another shot at it, but I don't know. I don't think I'm going to take it just because this is so trash. Price action is trash right now. We're 10 minutes past our time frame for the DR range, and we're still in the middle of the range. So we're going to get a late confirmation either way, which doesn't look good for DR trades. And if it's not good for a DR trade, then that says something. We're not expecting it to take off, you know, like it normally does when it's up here and it confirms relatively soon after the hour. I'm going to give it about 20 more minutes, and then I got to go to bed. So my goal is to try to just take some trades in the morning through the silver bullet hour till about 10 o'clock or 11 o'clock New York time, and then shut it down. And then Thursday and Friday when I'm off, I'll be in here probably most of the New York session. Whether or not I stream the whole time, I don't know, but definitely the AM and PM silver bullet sessions. I was just happy to get that one win early. That was a good start to my. I gave myself a challenge to take 100. If I can find it here. To take 100 of these trades. The type of trade I took earlier, and record everything. I'll get all my metrics, find out, you know, time frame wise, what days they hit, percentages for the time frame, I'm also going to take the 5 minute if I see it. And so this was a 1 minute. It was a win. I'll fill in the rest of this. And I'm going to try to do 100 of them and see where I end up. Let's look at oil. I knew it. I knew it. That'd have been nice. It kind of looks trash too, but I mean, it's at least going to break the DR here and confirm. This is currency. Same thing. It's just a really weird day. Maybe Monday following a FOMC week or something. I don't know if that was last week, last Wednesday. Everything is just really stalled today. Gold, no confirmation either. So on ES, technically, this would have been an entry. Break a structure right here. Fair value gap. Displacement this way. And that would have went for only 2.5 points though, so nothing to jump and shout about. Probably that would have been a stop right there. 2 ticks below the low, 1 tick below the fair value gap. Pretty strong if I was to take that trade. And at least be targeting that. So I don't know that I'd have to get the full 5 points there if I was targeting liquidity. I could go to that right there. But the criteria that we are trying to show people that repeats over and over and over with high probability is this sort of thing right here. And that fair value gap's awful small if you shrink it back, so I don't know. I've taken them and they work, so it's only a tick, but it's a fair value gap and it's with displacement. So it actually broke this structure and this structure. So it's fairly solid, but there just isn't a lot of room. Normally ICT teaches when you take that trade, if you're shooting for 5 points, you want to see 10 as a potential, and I don't know if 10, if we were targeting this liquidity, maybe it's a little bit more, but I still don't think 10. No, 7.5. So nope. But if we get a body close right here below this, definitely take something down to here. Technically that's a break of structure right here, but this is more of a market structure shift right here. This would be a change of character, a more internal type of structure break. This would be a more substantial, a better, stronger signal. I mean, because you had some of that here, and it's still reversed. But there was no fair value gap here, and we don't know yet if this was going to form a fair value gap or not. It's still got 30 seconds. Most likely it will. But being this close to the time I'm going to shut it down anyway, I'm just going to sort of tape read it and we'll see what happens, but I'm not going to take the trade. I needed a win today just to get my base hit, get my psychology back on track. I had a bad week last week. I passed my evals, got my PA accounts, and then basically lost my mind. It's the only way I can say it. I don't know. I stopped doing everything that got me there. So What I'm showing you right now is the easy part, figuring out price. The hard part is not doing stupid things, honestly. Sticking to your rules, following your plan. Yeah. And I'm kind of in new territory myself. This is the first time I've had PA accounts, and people warned me that it happens all the time. It's just a different aspect of the psychology that you have to deal with. So we'll see. I'm going to try to overcome it. I'm going to try to base hit my way back up. Definitely not quitting. But at the same time, I'm on a pace. I could fail these 3 times and still be within my time frame for my long-term goals. So I've got a very, very leisurely pace, low pressure. You know, I'm not putting any more stress on myself than I have to. I've got a great job. I'm not trying to, trade for my bills, trade for my food, none of that. I'm still in the learning process big time. So generally, this doesn't come back up here to this area, but it just closed the fair value gap. We'll see what it does. There's equal highs here, so it becomes a target. Actually, I should say this one is more protected as far as the swing. Yeah. And this low isn't even valid for a market structure shift because this high it didn't create a push that took out this high. So this is not a validated low. Our next validated low would be down here somewhere before we could call it an actual market structure shift. We're going to put some links up to some really good videos on market structure shift. You definitely won't be wasting your time trying to understand how to recognize shifts in the market, especially on the higher time frames. Because if you can find a shift in the hour time frame, then you zero back down in here. Say we're bullish right now in the hour, which we are. If we go look at the hour, so if you stretch this out a little bit, right? On the hour time frame, we're still very bullish. And if you know that, you know when to calculate the shift, then all you take is shorts. If you know it's coming back down the other way, it's shifted. Those market structure shifts are very, they're prominent. That means something. So if you catch a market structure shift and you align that to your bias to only take trades in that direction, you're going to be right a whole lot more than you're wrong. Just like if we'd have had a long bias anywhere here, our trades have a lot better chance of taking these big pushes up, with small retracements, and that's kind of what you want to be able to get in on. So this was not a market structure shift right here. We did not get a body close below these locations here. So really this it was a breaking structure. It was a change of character, but it was not a market structure shift. So there's no reason for us to anticipate a big push down yet until we get that market structure shift. So when we put those videos up, I'd highly recommend watching them. I think we got one from ICT, and then we've got one from somebody else that's really good. And it really opened my eyes when I watched it the other day. I'll definitely watch it again more than once. So now we're seeing the same thing that we saw in NQ, the sideways consolidation. You could almost draw your box again. So there's our consolidation range. And as we're watching this, we're expecting price to do the same thing, basically push through one side and then rip to the other side. That's the expectation. That's what happens most of the time, but it doesn't happen enough to where you can just market order as soon as it pushes through and hope it goes the other way, because you still have to wait for your signals criteria to be met. Hey, what's up, Adam? I got my base hit today. Back in the game. For those that weren't here, this was the trade took earlier based on that criteria. Liquidity grab, market structure shift, fair value gap, stop loss right here. Got in at a really sweet time. Took a partial at 5 points, targeted the next liquidity level, and left the runner. So that's, I haven't traded this way before. I've been trading just a full contract and getting out, and I want to try to change this to where I can start taking advantages of partials and runners. So I've got more than my 5 points on this trade, and it worked. I mean, that's the way you want to do it. That's the way the guys that I see and I watch, you know, ICTs and you know, Kraken, you know, when they're doing their trades, they're trying to take some off and then let a runner run. So that's what you want to gravitate towards over time. It's a little bit more complicated, you know, than just hitting the market order to get in, market order to get out. That's simple, but you aren't giving yourself the full advantage of what price may give you. So the goal should be to always, you know, improve, try to get more out of your winners and less out of your losers. This is so ugly. I had other instruments up that I was trying to trade, but I'm just going to stick with ES, good, bad, or indifferent. Once I'm trading the, you know, 20 PA accounts, honestly, I need one trade a week. Like I just took, that would have been my week right there. If I made that trade in a week, I wouldn't need to trade the rest of the week by a long shot. I mean, so with that in mind, you know, I'm going to be picky. I'm going to be selective. And just look for the stuff that's, you know, the highest probability. That's the benefit of using the copier and the multiple accounts. If all I had was one account, you know, that's a nice little trade, but I'm not going to quit my job on that. But with 20 accounts, you know, that's 20 nice trades basically. That was a full ICT plus, you know, target. He says you get one of those a day. You know, if you get one of those a day every day, yeah, that adds up. You can quit your job. But if you get 20 of those in a day, then, you know, you're that much farther ahead of the game. That's why I encourage everybody to sort of head down that path. I think that's the game changer. That's the way to take the most advantage out of this style of trading and futures. And you know, not everybody has access to the copiers and the prop firms who are trying to give you, you know, $50,000, $100,000, whatever it is, accounts that you can trade their capital on. All right, so nothing's going to happen here in the next 5 minutes. I think I'm going to shut it down and go ahead and go to bed. I mean, if one of you guys want to take over and share your screen or whatever, that's fine. I mean, you know, you can carry on right here and just go with it. If Adam wants to do it, Hussein, Jake, if anybody wants to jump in and take over, that's fine by me. And I will see you guys later. Have a great day.